Welcome, ladies and gentlemen. I'm here with Wall Street Institute and Company. Another week in the financial market. As usual, we're going to do our live market analysis, also share some tips on risk management and psychology, um, as well as fundamentals of the financial markets. With that said, sorry for the slow start this morning. So yeah, remember, if you have any question, drop it in the comment section. Also, if you have a suggestion or a pair that you'd like us to analyze together on this live stream, once again, you can do the same thing. Drop a comment in the comment section. Let us chat. This platform is for traders. So you could be a beginner, you could be an expert trader. It is to help you navigate the markets. It is to help you understand the thought process that goes into analyzing the markets. Where should you place a trade? When should you actually take a trade? How do we identify opportunities? How do we decipher the fundamentals or the macroeconomic news to get ideas? The news top of the highlight, we have the UK wage growth uh, remains going up steadily. It rose by 6.9%. And it is expected to go all the way to 7 point. This rise for the second day. So this is good news for hits 15-month high on strong wage data. It's still positive news for the euro, positive news for the pound. Japan mature orders drop at a softer pace. So that's the stocks rise on Wall Street boost. Oh, it'll be interesting to see how that goes. Australia business mood improves. It's positive news. So slight confusion from the Asian markets. Philippines exports rise for the first time in 6 months. Once again, I'd say we have 50 positive news on Asian markets and 2 negative news. And overall, the euro and the pound are looking good this morning. And this being the London session, it is perfect. So we're going to look at that. Before we get there, let us look at our Forex Factory calendar, which basically tells us the time on which a particular news event is going to be released, the kind of impact it's going to have, on which currency to be specific, the details, and the figures as well. So today being a Tuesday, we don't have a lot of high impact news. We only had the climate change, which came out a bit negative, which means that less people filed for unemployment, which is good. It is good for the pound. Also, average hourly earnings went up by 0.2% previous value and just 0.1% higher than their forecasted value. We can expect more or high impact news on the Asian markets, that being New Zealand and Australia tomorrow morning, and later on the pound from China, as well as the US and Canada towards the end of the day. My time, it is GMT +2 Greenwich Meridian time. So now let's get to the charts. As of last week, as you guys, we were bearish on the dollar, which is the dollar index, and rightfully so. The market has pushed to the lows of 101. However, we still have some unmitigated areas of supply around 103 that we believe the market needs to come back, tap into before we can see a further drop to the downside. Say for the next couple of months, I'll be very bearish on the US dollar. Um, Moving on to commodities, we've got gold. So we had some analysis here, still from last week. It seems like market has not changed. So we're bearish all along. So we changed character here. So currently, if we look at this area here, we're forming highs. We're breaking highs basically, showing that we are in a possible uptrend, right? So it'll be interesting to see how price moves. This morning we reacted to this area of 1933.5. We will see how the market moves around those areas. Let's see on a 1 hour time frame. Yes, we did get a full body candlestick close above this recent high, meaning we have a um a break of structure. So gold is expected to continue pushing to the upside. With the weakness in the dollar index, gold is moving exactly how it is supposed to. Probably we could have used this entry at the order block that caused the break of structure, but we missed it. Let's check on 15-minute time frame. Last lowest time frame that we go into. Um, Seems like 5 minutes can work for us as well. So using this strategy, it seems like we had the last lower high here, which was mitigated, and a change of character. And when you look at the order block that changed character, it is this one right here. Order block, does it have imbalance? Yes. Did it break structure? Yes, it actually changed character. So it will be interesting to see how the market pushes after strong push and strong rejection at this area. However, if the market does come down here, we'll be looking at taking more buying opportunities. Stop losses above below that low. Target profits all the way up there. Man, 1:11. Nice risk reward ratio. We will in would wait to see the market do a couple of things for us to commit on this trade setup. So let's go back to a 4 hour time frame, because we're still looking at the overall picture. This is not straight. There we go. Okay. Oil. With oil, we actually broke above the 73 level, which was my sort of target for more bullish movement last week. So at 75, it's where our unmitigated area of supply lies. So it will be interesting to see how it reacts to that. But if it does give us opportunities of joining the bullish movement, I think the best place to buy would be here around 72. So you'd wait for price to drop a little bit and then push all the way up on oil. We don't have news that touch on oil this week, so we're good. There we go. There is your area of demand. So tap into that and then a push to the area of 75. Pretty good move that can yield a high reward. Cable, pound dollar. So we missed an entry here from this doji. So market just tapped into this doji and pushed all the way up. No hard feelings, it happens. So we had a break of structure here. We had this area of 1.28500 that we had our eye on as a potential point of interest, potential point of reversal, or market breaching through that, which it is exactly what it has done this morning. What's the simplest way to trade this? it will be waiting for the market to come back to the order block that broke structure, which is on a bigger time frame scale. It is this one right here, but you can um, sorry, you can modify it to a 1 hour time frame. That is the lowest time frame that I believe you can go to. So there it is. So we do have some imbalance here. So with this one, almost like gold because of their correlation to the US dollar, it's negative correlation. Cable and gold are negatively take advantage of these trade setups. The market, this is what the market is going to do, or it has to do this. We just wait for the market to do what it does, and we react accordingly. Pick the A grade setup with the best risk management, and yeah, there we go. We just see how or where the market takes us. Dollar index. Um, Shout out to MaxSC for holding this one. Last week he held, I think, all the way down. So I still believe we're coming back to the areas of 15,200 or even 15,100 because that's where the last demand level lies. Last supply level on a daily time frame, it is this one right here. So once again, we want to see if the market respects that. So currently, right now, by the look of things, it looks like we're gonna have it like this, push to the upside and down. Why are we considering that order block? Number one, it caused break of structure, as you can see, to the downside, confirming that the order flow is bearish. Reason number two, that's the same order block that caused this imbalance right here. So yeah, everything happens for a reason. There's a reason we have all this markup. So what we normally do, we then go for our masterpieces. Our masterpieces are the trade setups that A grade setups that are worth risking our money on. So that's it with DAX. Let's look at Aussie dollar. I don't know. I put Aussie dollar. Maybe just because we're just from an Asian session which is closed, I think probably 4 to 5 hours ago. So yeah, this is what we're looking at on Aussie dollar. We've got this order block here which was not mitigated at 0.67500, which left huge imbalance as the market was pushing aggressively to the upside, to the downside. Sorry, that is. This is the same order block that caused the break of structure right here. So hence we consider it highly. So we had more breaks of structure to the downside, confirming that order flow, sorry, is bearish. However, we still need to come back and mitigate that. Personally, this is what I'm anticipating. area of demand here, which was left unmitigated. So yeah, I've got this order block up here, which euro pound. There's a trade that I took this morning at this level. So I've been waiting since last week for the market to tap into 0.85400. Eventually we did that, and if you look at it, we have some nice rejections here. One, two. Can't say much about the current candlestick because it hasn't closed yet. But however, these are the reasons for entry. So we had a change of character here, probably clear on a 5-minute time frame. Yep, there we go. So we had this change of character here, and the market came to the order block, that change of character, which is where we made our entry. So this is a nice 1:8, I think, according to the metrics on my trade. 1:6, which is a good risk reward ratio trade. We'll see how it goes. Right. What else? Oh, I just went back now. So let's go on a forward time frame. Remember, we never ever make our projection based on a 5-minute time frame. Okay. Yeah, this is a tough one. This is a tough one. My major high is 0.655 and major low being 0.63. 600. Once again, it's interesting to see how the market will react to these levels. Otherwise, I had this